The investment management firm BlackRock has $8.67 trillion in assets. They operate from 70 offices in 30 countries, serving people in 82 languages, and employ over 16,000 people, similar to Apple, Microsoft, Intel, Amazon, Facebook, Tesla, ExxonMobil, and Nike. In today's episode, we'll take a look at the life of Larry Fink, who is widely regarded as one of the most powerful men in finance today. His origins are far more humble. His father owned a shoe store, and his mother was an English professor. After earning a BA in political science and MBA in real estate from the University of California, he started his career on Wall Street when he was 24. He was just another kid from LA trying to make it in the world's financial capital. He began his career in Boston, where he received a starting salary of $20,000 from the start. As years passed, the management recognized his hard work and expected him to become CEO. 3 years after joining First Boston, he was put in charge of creating and developing mortgage-backed securities. He would spend long hours on a Monroe calculator, which was the only technology they used back then on a trading desk. Fink was able to boost First Boston's profits by $1 billion. On Wall Street, he was regarded as a legend. He oversaw some of the largest transactions, including the $4.6 billion securitization of JMAC auto loans by a 27-year-old. By 1983, he had become the youngest managing director in America, as firms across the country began to use computers on trading desks. This was the first time computerized technology was used to generate numbers for a calculator. Despite the fact that it is extremely quick and simple to use, it was still in its infancy. Something bad happens after 3 years of using computers. The finance department made a mistake in the second quarter of 1986. The department predicted that interest rates would rise, but the opposite occurred. First, Boston misappropriated $100 million of their clients' funds. Larry was the man in charge. Fink went from hero to jerk in a single day. Everyone in the office and on Wall Street noticed the error. Worst of all, it wasn't his fault. On the basis of the numbers he calculated, he had left the back office, but due to a computer error, the calculations he had performed did not turn out as expected. It was extremely humiliating. Relationships changed because I was not treated as a partner or with the dignity that I expected. Fink was at a loss for what to do next. All he could think about was the money he'd thrown away. Nobody fully comprehended the dangers. The computer systems were insufficient. I never forgave myself for not understanding what had gone wrong and failing to devise a plan. Nobody predicted that he would rise from the ashes to found the world's largest management firm. According to his close friends, he felt compelled to redeem himself in order to demonstrate that he possessed the goods. So, in 1988, 8 partners with backgrounds in mortgage-backed securities formed BlackRock in a single room. Their vision was to manage assets that were more beneficial to their client. The firm began operations, and one of his first clients was the FDI. Until the establishment of the Resolution Trust Corporation, the industry was on the verge of failure. Fink and BlackRock were hired by FDI to manage the assets of SNLS that had been taken over. Meanwhile, in the background, BlackRock was developing a Fink version technology. By 1991, the technology had been dubbed Aladdin. BlackRock was in charge of $9 billion in assets. By 1992, they had $17 billion, and by 1994, they had $53 billion. In 1995, Kindler Peabody, which owned Peabody, brought in Fink to assist in the liquidation of Kidder's $7 billion portfolio of mortgage-backed securities. PNC Financial Services Group paid $240 million for a stake in BlackRock Financial Management. Some argued that the move was unnecessary because BlackRock was only giving up a portion of their business. Fink, on the other hand, knew it was just the start of a long climb. And BlackRock was about to change everything with the upcoming product. Technology has always been an important part of our value proposition and a key differentiator for BlackRock. Technology is transitioning from a competitive advantage to a competitive requirement as the investment landscape evolves. BlackRock introduced an evaluation and management system, with 5,000 computers running 24 hours a day and overseen by a team of engineers, mathematicians, and programmers. BlackRock's system could monitor millions of daily trades and scrutinize every security in his clients' investment portfolios to see how they would be affected by even minor changes in the economy. The system was effectively searching the markets for anything that could go wrong, and it would serve as the foundation for an expanding second business. Today, BlackRock's reach extends beyond asset management and into the business of advising clients. To put this figure into context, Aladdin manages $20.6 trillion in assets. This represents approximately 17% of the world's bond. BlackRock went public in 1999 with a strong portfolio, but people were skeptical of their new technology. As the years passed, BlackRock had the worst IPO of the month. The market saw that, despite having the cheapest stock, BlackRock was living up to the promises made to shareholders after organically growing for 16 years, and had decided to use the power of acquisition. In 2008, on a flight to Singapore, Fink flew back after the Lehman Brothers declared bankruptcy. The financial world had changed, and was in serious trouble. Government officials telling them that the shit is about to hit the fan. You have to take action. During the 2008 financial crisis, the New York Federal Reserve Board appointed Fink to manage a $30 billion portfolio of Bear Stearns assets. Following the bank's failure, banks contacted Fink to evaluate their portfolios, and Aladdin was used by the feds, banks, and the Treasury. When the world was crumbling, Aladdin continued to expand by adding more institutional clients, and it became the first port of call during financial crises. Consider that the man who was humiliated had come to save the country from a financial crisis. The buying continued from there. Fund was purchased by BlackRock for a reported $1.3 billion. In addition, BlackRock acquired Barclays Global Investors for a reported $13.5 billion in 2009. With this acquisition, BlackRock will become the world's largest asset manager. Fink recognizes the value of technology when used properly. For 14 years in a row, he had been named one of the world's greatest leaders, and one of the greatest CEO in the world. And with this ends the story of a fired man is now become the most powerful man in finance. Until next time, have a good one.